liquefied petroleum gas, LPG, which is used for cooking all across South Asia. That's going to be a problem. Naphtha, that's a problem. Jet fuel, already shortages. Diesel, ethane, propane, butane, so on and so forth. Flights become more expensive.
We can't help it, and it's also important. So all of us are watching what's happening in Iran as the United States initiated a major war in a critical part of the world. They made a very smart decision, which was to say, we cannot, to realize, we the IRGC, Iran, cannot go toe-to-toe with the Israelis or the Americans, the great Satan and the little Satan. They can defeat us and will in any conventional clash. However, if we adopt a multi-layered, dispersed command and control structure based along the lines of Communist Party cells, nothing to do with the ideology, but to the structure of power sharing and control and command, then we will be resilient.
I mean, Glenn, I was going to interject and say there are three parties. It is a ménage à trois. And all three have different incentives. And the Israelis certainly see this as existential. They don't want to stop. Welcome to the March 2026 edition of FO Exclusive. Last month, we focused on two issues. One, a hot mess after Supreme Court struck down Trump tariffs. And two, imminent conflict between Iran and the US. This month, we will shine the light on two issues again. Usually we do three, but we have two weighty issues today. One, the dangerous implications of the new US/Israel-Iran war. And two, big trouble in US private private credit market. So before we dive into these two issues, let us do a recap of key events in an eventful month. So the first thing we should all pay attention to is that the US debt has crossed $39 trillion. I repeat, $39 trillion. 5 months ago, it hit $38 trillion. This was late October 2025. This is debt growth at record pace. Never before has US debt grown so fast. Never before has US debt been so large. When US President Donald Trump first took office in January 2017, this debt was $19.9 trillion. Not only has US debt nearly doubled since 2017, interest costs have risen to over $1 trillion per year. This has provoked alarm even in usual. Please.
Of course, Donald Trump promised that he would eliminate the debt, and he thought perhaps it would take 4 years.
I thought he said he would halve the debt, but knowing Donald Trump, I wouldn't be surprised. The point stands, though. He promised something, he didn't deliver on it. And now, given the US debt situation, this has provoked alarm even in the usually complacent congressional circles. There's something more to be alarmed about. The most recent $69 billion auction of 2-year treasuries drew tepid investor demand. And drew tepid investor demand is quote unquote. This is really dangerous territory because for decades, US treasuries were the safe haven for any investor anywhere in the world. People wanted to hold US treasury bonds. And now, of course, they are not so enthusiastic about it. And the 10-year yield jumped from 3.94% to 4.38%. So this is a very significant month, and this has largely gone unnoticed in the whole brouhaha about the Iran war. We'll get to the economics of the Iran war later, but suffice to say, danger signs are flashing red. But there are some things that are positive, I suppose. The US had closed its embassy in Caracas, the capital of Venezuela, in 2019. This month, the US re-established diplomatic and consular relations with Venezuela, 2 months after removing Nicolas Maduro as president. They very kindly brought him here as a tourist to New York. He's a tourist in chains, however. The chap awaits trial on drug trafficking charges. And whilst he's been away, his spy chief, who oversaw torture dungeons and all sorts of shady jobs, he has now become the new defense minister. The US-backed interim president, Delcy Rodriguez, has promoted this baby-faced chap to secure her grip on the throne. And Rodriguez's leftist regime remains in power, but has been working closely with Washington, D.C. to open up investment in its oil industry. So Venezuela's parliament has also approved a law that allows foreign and private companies to invest in mining. So now American companies will go to Venezuela. America will own the resources of Venezuela. We'll have the great petrol reset, as I've mentioned. That is the pet theory of some young Republicans, that once America has control over petroleum reserves, it'll be able to push down the cost of oil. This will give a supply shock to the global economy. This will give a cost advantage to US industry, and it'll reshore a lot of manufacturing jobs to America, and it'll make America great again. And Glenn, I see you're not very convinced by that argument.
I am left speechless. We're going to begin on all that. The best case scenario would be an intensive restructuring of the Venezuelan oil industry, which I'm told would take a minimum of 5 years before any material changes to supply and production could really occur.
Huge amount of investment, too, billions of dollars, actually. But moving on to another big trend or another big event, an ongoing event or tension in the US, is the clash between the American government and Anthropic. Now, Anthropic is an AI technology company. It owns Claude. A lot of people use that for coding. A lot of people use that for all kinds of things, including writing papers. And basically, the US government has decided that Anthropic is no longer to be used. Anthropic made or had a row with the US government over its use in defense. The Pentagon wanted to use Anthropic's AI for all legal purposes, but Anthropic wanted safeguards in place when it came to its use for mass surveillance as well as autonomous weapons. Donald Trump has called Anthropic an out-of-control radical left AI company. The government has announced it's a supply chain risk to national security. This is an unprecedented designation for an American firm, although reportedly Anthropic's tech is still being used in the Iran attacks. So I suppose all is good. OpenAI has stepped into the breach. Apparently, in Silicon Valley, a lot of people have far too many unflattering things to say about the CEO of OpenAI. Apparently, he would slip under the door like Marco Rubio and weasel out of any situation. But that's not our job to analyze OpenAI or Anthropic. But this is a significant trend. Another significant trend, speaking of AI, is Block. Block owns Cash App, Square Payments app, and Bitcoin assets. Block announced that it would fire 40% of its workforce, 4,000 jobs. Now, who is the CEO of Block? A certain Jack Dorsey, who was the CEO of Twitter. Now Twitter is X. Elon Musk runs it. And Jack Dorsey said AI tools have changed what it means to build and run a company, and most firms would soon make structural changes. Now, this has sent cold shivers down the spine of many engineers in Silicon Valley. So far, the Silicon Valley engineers had free food, massages, fantastic playground-like campuses in Google and Facebook, and now suddenly they are being cast out into the street. Now, if you go to Silicon Valley, as I have just been, I was there earlier this month, what is surprising is that in San Francisco, you don't have many Uber and Lyft drivers. You have way more driverless cars. So there's a massive dislocation coming, and that is scaring a lot of people. But as with any dislocation, there'll be winners and there'll be losers. And Swarmer, a Texas-based company that develops AI software for coordinating military drones, has seen its share price rise by more than 1,000%. Glenn, did you buy any shares in Swarmer? Did you manage to get some IPO offerings?
One should never take advice from me on which specific stock to buy, which is why I don't buy stocks.
Anyway, so the IPO, the initial public offering on NASDAQ on March 17th, has been a spectacular success. Apparently, Ukraine's armed forces have used Swarmer's wares since 2024. And the Trump administration has recently sped up the rush to develop American drone tech. In 2025, the Trump administration basically banned almost all Chinese-made drones for national security reasons. So while the US is doubling down on AI, French President Emmanuel Macron has gone nuclear. He has announced, and by the way, the New START treaty has come to an end, but that is what it is. That was a treaty for arms control only between Russia and the US. So France was never a party to it. But anyway, French President Emmanuel Macron has announced that his country would increase its nuclear weapons capability. France would launch a new nuclear submarine in 2036. And he said the next 50 years will be an era of nuclear weapons. Apparently, France will work with Britain, Belgium, Denmark, Germany, Greece, the Netherlands, Poland, and Sweden on a new forward deterrence strategy that will involve joint exercises. The French president, of course, as a modern-day l'empereur, will have the ultimate say over firing the missiles. Moving on from France to further east, and let's go all the way to Afghanistan and Pakistan, two neighbors of Iran. Apparently, they are having a go at each other. Fighting between Afghanistan and Pakistan has broken out in full earnest. Thankfully, they had a break over Eid, but they've promised to be back at it. Pakistan has been striking both what it calls terrorist strikes, as well as the Taliban's military facilities. One of these facilities includes the Bagram Air Base. And Pakistani jets, rather, destroyed a 2,000-bed drug rehabilitation hospital in Kabul, resulting in a reported death toll exceeding 400 people. So this conflict has erupted again, and at the heart of it really is the Durand Line, which Pakistan accepts, but no government in Afghanistan has ever accepted. Monarchical or democratic, communist or theocratic.
Jump in, Atul, but we should describe what the Durand Line is for most people, because
please.
It would, unless one reads a lot of Rudyard Kipling as I do, or unless one grows up.
So do I. I love Kim, and I love Kipling's poetry.
The Durand Line will be strange. And this is the border between Pakistan and Afghanistan, written in the Foreign Office, I believe, in the 1880s by a British Foreign Office official. which has never really been accepted by any of the ostensible countries there or the various ethnic and tribal groups. So this has been one of the struggles.
I'll correct you, Glenn. The Pakistan, which is a successor to British India, just as India is a successor to British India, Pakistan accepts the Durand Line and wants it to be the international border. Afghanistan has never accepted it.
Yeah.
And the Pashtuns, many of them on both sides of the border, have not accepted it.
Well, that's the thing. I was just going to say, I stand corrected, but Afghanistan is, and this would outrage many Afghans to hear me say it, has been fundamentally Pashtunistan, or a want to be Pashtunistan, and therefore the Durand Line is in the way because the Pashtun live on both sides of it, and the Pakistanis have both conveniently ignored this because it has helped them try to get the Americans out of Afghanistan, and as a way to try to dominate the region to the north, but also because they can't do anything about it. They've never been able to extend the sovereignty of the state fully into the border regions, northwest frontier provinces, and Pashtun areas where the Durand Line separates Afghanistan and Pakistan. And so the chickens have come home to roost. I said, and I'm hardly the first and hardly the most knowledgeable person, but when I used to work with Pakistani counterparts 25 years ago and more, 30 years ago, we all knew, the Indians knew, the Americans knew, everybody knew that the Pakistani intelligence service was exploiting, supporting the various terrorist groups in the region, in part because they were buying them off. We'll help you so long as you kill people we don't, that are not us, that we don't really mind, and in part because they were exploiting them to create problems for India and then the United States. But when the U.S. left, the dynamic changed, and we had said, Americans have said, as I think most people did, decades ago, that you don't want to be Dr. Frankenstein, Pakistan, because you will create a monster that will then come and kill you. And this is what's happening.
All right. You'll be very popular. You are indeed very popular in India. I'm not so sure you'll be popular in Pakistan. But moving on swiftly from Pakistan and Afghanistan, let's turn our gaze to China. And the Chinese government has set this year's GDP growth target to 4.5 to 5%. This is the lowest range in decades on account of the collapse or the bursting of the property bubble. And by the way, we shouldn't toot our horn, but we will. Glenn and I were constantly warning about the bubble, the real estate bubble, long before many others in this country and in many other countries paid heed to it. And we explained reasons. You can go back and watch videos in the past. And that collapse of the real estate bubble or the property slump has meant that growth in China is lower. Last year, the economy expanded by 5%, right on the official target. Perhaps the Chinese know exactly how to hit numbers, or they know how to massage statistics to hit the numbers, as communist regimes often do. But the important thing is that instead of just denigrating China, we have to point out that they have laid out a strategic plan to boost AI and the core digital economy industries. They have pledged to keep their competitive advantage in rare earths. So their plenum, or I'm forgetting, the document is open, the long document I have about the big meeting they had and came up with their new economic plan, has some sensible stuff in it. And importantly, defying American tariffs, China's exports rose by 21.8% in January and February year on year. blowing past market expectations. Imports were also up by 19.8%. Chinese manufacturers have turned to other markets to offset a decline with the US. Exports to Europe have increased, South Korea, Southeast Asia, and they've increased by significant figures, 27.8%, 27%, and 29% respectively, 29.4% respectively. So the Chinese export miracle still continues. China still continues to be the factory of the world. And even as Chinese exporters were doing well this month, their German counterparts suffered, battling American tariffs and falling sales in China. Volkswagen's operating profit fell by half in 2025. The car maker is now cutting 50,000 jobs in Germany by 2030, up from 35,000 it had agreed to with unions in December 2024. So bad news for European companies and European economies, and the current war, and this brings us nicely onto the dangerous implications of the new US-Israel-Iran war. I repeat, the dangerous implications of the new US-Israel-Iran war, and the implications are many, but one of them happens to be that all those countries relying on their energy from the Gulf will suffer more. So over to you, Glenn. We have a few scenarios in a neat table which people can ask for. We have our FOI Iran report. So anyone who wants it, email us. We'll send it to you. But why don't you walk us through the scenarios, sir?
I'll try. We all are, of course, everyone's eyes go to the glittering and moving object. It's instinctive. We can't help it. And it's also important. So all of us are watching what's happening in Iran as the United States initiated a major war in a critical part of the world. Nonetheless, or that said, we will try to avoid the glittering facets and try to look at the deeper changes that this may portend. So intelligence services and we, and the State Department too, since the future is unpredictable, can nonetheless discern or attempt to discern with some accuracy broad trends, and will do usually three scenarios, depending on how some immediate factors play out. Will a particular battle go one way or another? Will an interest rate go one way or another? How will that imply the cascading, extending decision tree and consequences of those acts? And then come up with broader trends. And that's what we've done. So three scenarios that we can see. The first has almost been disproven, or it has been disproven for a month, which is that Iran would fold under the tremendously effective, in many ways, onslaught by the U.S. and Israeli air forces, fundamentally.
This is unlikely. Glenn, sorry to interrupt, just to give people an idea about the numbers. By day 21, the US and Israel had struck 7,800 plus targets. They had destroyed 120 plus vessels. They had flown 8,000 plus combat flights. And these flights had struck 900 targets in the first 12 hours. So, yes, impressive. A huge success, a stunning tactical success.
But this has largely been, this likelihood has been disproven every day with continued Iranian defiance. And why is the prospect of Iran folding as a result of the U.S.-Israeli military pressure low? It's quite interesting, really. It's not simply will and hostility. but good planning on the part of the Iranians about the year. There are two different times, but at two different points in the past 25 years, one around 2003 and the other, I think it was 2008 or 9, the Iranian Revolutionary Guards, who are really the power that runs the country. We think of it as a theocratic mullah.
Glenn, sorry to interrupt. They are the Islamic Revolutionary Guard Corps, the IRGC, the Praetorian Guard of the Islamic Republic, which came to power, which came to power after the 1979 revolution.
So they have progressively, the IRGC, which is really an army linked directly to the spiritual leader, not the civil structures of the state, have progressively come over the past 50 years now to dominate the state, dominate the military power and decisions, dominate foreign trade. They run and frankly to dominate the mullahs. Not entirely. There is a dynamic. There's a very complex political series of power centers that cooperate, compete, and conflict. But fundamentally, Iran has become a garrison state run by the Iranian or Islamic Revolutionary Guards. They made a very smart decision, which was to say, we cannot, to realize, we the IRGC, Iran, cannot go toe-to-toe with the Israelis or the Americans, the great Satan and the little Satan. They can defeat us and will in any conventional clash. However, if we adopt a multi-layered, dispersed command and control structure based along the lines of Communist Party cells, nothing to do with the ideology, but to the structure of power sharing and control and command, then we will be resilient. It's the same approach.
They called it the mosaic. They called it the mosaic strategy, just to give people a bit of color. This mosaic strategy means that the 31 different provinces, commanders can make decisions on their own, use their own judgment. Of course, they have written orders before. They also planned for a succession up to 4 levels. So let's assume you knock off A, then you knock off B, then you knock off C. There's still D. They've planned that out. They also, I'll hand it over to you, Glenn, and they also have dispersed their fissile material. They have deep underground missile infrastructure. They have drone manufacturing dispersed all across pretty much the country. And they have emulated very much the Viet Cong in some ways. Over to you, Glenn Carle.
Right. So it's dispersed, diverse, multi-layered, and decentralized. And it's the exact same model that the United States military and most militaries and private companies have taken with regard to communication. If you have a single point of failure, then you cut a telephone wire, a telegraph wire, and all of a sudden communication stops. But if you have 50 different telephone wires going 50 different routes, then you have a much harder problem if you're the opponent in trying to stop the command and control. This is why one satellite is good, but 5,000 satellites make it fundamentally impossible to stop the communications of the U.S. Defense Department. And in this instance, they're quite hard to decapitate and disorient and render incapable of action the Iranian power structure. And that's what the U.S. is confronting. And then there's the issue of will and objectives. And something that Atul and I have spoken about in other settings, a lesson that any negotiator and war fighter policymaker should learn early on, is that no argument is ever done. You never win an argument unless there's some mutual agreement. You can dominate, you can impose some, possibly, if you have great strength. But even if you do, the other side simply won't agree, and it will continue forever to pursue its interests as it sees them. No one ever is cowed or humiliated. One may be humiliated, but that increases one's opposition to the entity that humiliated you. So there's no end unless it's agreed to on both sides. So that the Iran folds prospect is low, is low. The second scenario is an early negotiated peace. Now we could say, I don't know if a month end is early. I think you can still argue 1 month war is not long. This is actually possible. The Iranians, all of us on the world now are in, and I would argue, the shocking position where when you hear conflicting statements about ongoing or the lack of ongoing back channel negotiations between the United States and Iran, one, I think, should assess that it is probably more likely to be accurate statements, characterizations coming out of Tehran than out of the White House, which is quite shocking because they are duplicitous group, quite hostile to the West. But we all should know by now the man in the Oval Office. But there are signs. It certainly would be a rational result from both parties' perspectives to negotiate a settlement. However, that... Yes, please. I'm sorry, Atul.
Glenn, I was going to interject and say there are three parties. It is a ménage à trois. And all three have different incentives. And the Israelis certainly see this as existential. They don't want to stop. They believe that should, and this is not just the Likud people, this is even people who have opposed Bibi Netanyahu, even the centrist people like Joseph Olmert, people who've served in their intelligence and security services. They think that should the regime survive, the regime will go nuclear. And should the regime go nuclear, this regime, the Islamic Republic of Iran, which has chanted death to Israel for decades, will use the nuclear weapon against Israel. And so they want to mow the lawn, which is the term they use for decapitating the top leadership, and keep mowing the lawn until the regime crumbles and collapses. And they want Americans to come along for the ride. Now, of course, Americans want an off-ramp, and Donald Trump wants to get out of it because I suspect all the money coming in from the Gulf may dry up. He may have his own interests. But there is no incentive for the Iranians, or low incentive, I shouldn't say no, to join the negotiating table, because they think we can negotiate something, and we may be negotiating something, and we may still be taken out. And there is this fear that come what may, whether we agree to something or we don't, we are on the menu. It's like the walrus and the carpenter, an analogy often used by many people. They are on the menu. And so trust is really low, which is why the likelihood, as we see, is low. It is the most rational thing to do because Iran has proven its point in a way, and it can claim that it has saved honor. And the US can also say it has saved honor by, killing, or rather the Israelis have killed the top leadership for the US, but they have killed Khamenei. So each side can claim victory and walk away rationally, and yet it seems unlikely they will do so.
Well, all of this has been talking around the objectives, the scenarios, which we haven't finished going through. Your comments about the ménage à trois, which is an important point to make, have not touched upon what really should be the fundamental question. The first question that anyone who goes to war should address before pressing the trigger or issuing the order, which is, what are we trying to do? What are our objectives? And I've spent my life quoting a French proverb. I think I believe it is Montaigne, who said, "Nul vent ne sert un navire qui n'a point de port destiné," which means that whatever wind is blowing, it serves no purpose if you have no destination. Where are you trying to go? I'm laughing because it's so fundamental and so clearly ignored in this war. What is the United States trying to achieve? Now, the Israelis are more clear. They want to see Iran no longer a strategic threat. That's legitimate.
Yeah.
You can agree or disagree, but it's certainly sensible. If you have decided or believe that you're existentially threatened, then you should, if you want to survive, you need to end that threat. The only way to end that threat is to change the regime or destroy it. So long as the regime, which is Iran, has as one of its founding principles, its objectives, the destruction of Israel, which is what Iran claims to want to do. Now, if in fact they actually seek to do that, is another question. But any person or state that hears another say that I exist to kill you can rationally respond, well, I better do something to stop that threat. The Americans don't have that objective. What is the American objective? We do not know. Is it to destroy the regime? Is it to eliminate the threat to the region and to Israel from nuclear weapons? Is it to stop Iranian expansion and efforts beyond its borders in the region? Each of those is a legitimate objective, potentially, if the assessment of the intentions is accurate. But we do not really know. Of course, because all of us have been listening for years now, although some, not all, have been hearing Donald Trump say 7 things contradictory with each other simultaneously every day. So we do not really know. However, because the regime in Tehran is proving resilient, what seems to have been the implicit hope, almost explicit, I guess, of the first 2 or 3 days, which is that a strong blow against conventional capabilities of Iran and elimination of the top leaders would cause the regime to fall.
To implode because of economic distress and domestic unrest.
Since that has not proven to be the case, and probably was clear would not be the case before it happened, although that is debatable, to be fair. That is debatable, at least. The White House seems to be shifting towards a more achievable series of quote objectives, which would be the mowing the grass approach, which is that we have reduced Iran's conventional capabilities to take harmful actions that cause death outside of its borders for a period of years. And that clearly is the case, and that is an achievement on by the U.S. and Israeli militaries. And we then, Washington and Jerusalem, I guess I have to say, instead of Tel Aviv, will accept your continued existence. I would wager
what you're now getting on to, Glenn, sorry to interrupt, is scenario 3, that should there not be a negotiated peace, there is also scenario 3 wherein the US and Israelis, the Americans and Israelis could declare victory and unilaterally cease conflict, unilateral cessation. But again, we would assign this as low because of the depth of Israeli sentiment and threat perception. Israel genuinely is concerned, perturbed, and absolutely absolutely carries a fundamental conviction that, as Bibi Netanyahu said, if not us, who? If not now, when? And they really do think they will not get an opportunity again.
Yeah. Those are the questions, and the answer is that if not, forget the now when, if not us who, is that so long as the Americans are there to carry the water, then Israel can continue. But that Israel cannot on its own achieve the destruction of, or to invade Iran in a way that would cause the regime to collapse. So Israel is influential in this, but the United States, the White House, will really decide whether the fighting continues or not. Not that the hostility will continue, which will abide for Israel so long as Iran remains fundamentally the mullah's regime. But the fighting is really in the control of whether that persists or not is in the control of the White House, I think. And then the last, which is high, is that the conflict could continue to escalate because
and
what
that
does
is
the United
scenario
States do?
the escalation ladder. Conflict escalates.
The United States and the world can't really happily accept that the Straits of Hormuz remain closed. And so long as hostilities continue, the Iranians will continue to try that. That is the one card they really have to play, and it's a powerful card. And so what is the solution? Humiliation on the part of the United States? Possible, unlikely, as you said, or continued the continued status quo deteriorating, which is likely for the moment, or to resolve this, which the United States can do, would imply an escalation of conventional fighting, which means American soldiers on the ground seizing Carle Island, where 90% of Iran's oil passes through, and seizing in under various definitions, the Iranian littoral coast of the Persian Gulf, which it can do, and then open the straits at the cost, undoubtedly, of a certain continuous level of American casualties. And that's where things are likely to go. We don't know. You can only go in those directions.
So very quickly, let me run through some of the economic consequences or implications of the Iran war, which we must give thanks to our colleagues, managing partner of FOI, Sanjay Acharya, and the economist and investor, Manu Sharma. And
I think just for the help of our friends, listeners, we should both try, this is an exhortation to myself, just to tick off a couple of points in the short, medium, long term, lest we take us off into, like the Middle East struggles, into an endless discussion that never resolves.
Exactly. We cannot go back to the beginning of the Safavid Empire, which we did in our podcast. So short-term implications within 6 months, oil and gas supplies from the Gulf will remain throttled. Only a handful of ships are passing through the Strait of Hormuz. Demand for alternative sources rise. This is good for Canada. This is good for Norway. This is good for Russia.
And this is under whatever way the war goes.
Yes.
Really.
But in the short term, the global supply of refined products such as liquefied petroleum gas, LPG, which is used for cooking all across South Asia, that's going to be a problem. Naphtha, that's a problem. Jet fuel, already shortages. Diesel, ethane, propane, butane, so on and so forth. So flights become more expensive. Now, the supplies of industrially important byproducts of oil production and resources produced using cheap energy will also be blocked. What does that mean? Sulfur, asphalt, lubricants, plastics, petrochemicals such as benzene, toluene, xylene, and so on. So what this does is industrial costs go up. Also, helium, nitrogen, ammonia, urea, and aluminium, which are sourced because the Gulf is cheap energy. They are fundamental to critical industrial and agricultural processes. So in the short term, they will rise up. And
this is already happening. Already one hears in the Middle West of the United States groans and expressions of anger and anxiety, alarm by American agribusiness expressed directly to the White House, because they're saying, even though many of them are strong Trump supporters, look, what are you doing to us? You're killing us.
Exactly. And so in the medium term, which is within the year, these rising costs of industrial feeder products will lead to higher prices as well as cuts downstream production. So the supply shock will be pretty harsh and pretty strong. and any products requiring fuel or plastics, which will see higher input costs. Now, agriculture will suffer. Why? Because first, of course, you have higher fuel costs. Second, then you have higher fertilizer costs. A third, then this feeds into food shortages. Crop yields will go down. And because crop yields go down, there'll be food shortages and higher food prices. And right now, in the Northern Hemisphere, spring planting season has begun or is about to begin. So this is a critical time when fertilizers are off, basically off supply. A third of fertilizers come from that region, come from that narrow Strait of Hormuz. So this is major, and this will be a bigger problem in poorer countries. Expect Pakistan to have a problem, Bangladesh to have a problem, India to have a problem. There's a wonderful graph various people have come up with about which countries are most vulnerable, and it's a combination of how much they import from the Gulf and how much, what is the amount of remittances they get. And there are many countries that are extremely vulnerable. So what they'll have is after
so that's short term, medium term.
That's medium term. So after a fuel, fertilizer, food crisis, there'll be a forex crisis. So they'll have pressure on their currencies. They will even have pressure on balance of payments. And even richer countries like Japan and South Korea have already seen downward movement in their stock markets. And their industrial companies, and mind you, East Asia is the factory of the world, their industrial companies are going to suffer. So this is huge. So moving back to the Gulf in the medium term, the Gulf is not getting oil revenue or gas revenue or any of these revenues from any of the allied oil and gas products or aluminium. Please.
So I think we're going to have global medium term and short term.
Yeah, so in the medium term, let me quickly finish. So their export revenues have gone down and they import all their food. And so their imports have been throttled and the costs therefore have gone up. So Gulf monarchies will face a resource crunch. And to meet that resource crunch, because if they don't, they have very generous welfare states, they may lose political stability. They've already had instability not too long ago during the Arab uprising, especially Bahrain. So what will they do? They will draw down investments in private and public companies in the US and Europe. They will sell them. They will sell precious metal holdings. They will pause purchases of US debt because they won't be getting as much debt. And the US has $39 trillion of debt. So it needs to sell this debt. And these Gulf monarchies were a very reliable buyer of US debt, especially Kuwait, although it's a small amount, but still, all of them together, significant. And they will pause funding of new investments, particularly in AI. So what can we expect in the medium term? Within a year, asset prices to experience a more sustained decline than currently anticipated. We think Wall Street is wrong. Glenn and I think that often Wall Street is far too short-termish, and people who end up in business schools can be a bit Pollyannish. LNG-dependent countries such as South Korea and Japan, as well as Asian emerging markets, will suffer a lot. Longer-term interest rates will flare up worldwide, also in the US. Oil will probably trade over $100 per barrel for an extended period, regardless of whether the conflict ends. Gas prices will rise in line with oil, and precious metal prices will first fall because people will sell them to meet costs and then rise in a hockey stick pattern. So now the long-term implications, and that is within 3 years. Sustained high energy prices increase the risk of stagflation. In the 70s, we experienced that. Low growth and high inflation, typically referred to as stagflation, and that happened because of the Yom Kippur War in 1973 and because of the Iranian Revolution, 1979. And this time, inflation could be worse because of decades of loose monetary policy. Supply shock is coming at a time when we have a lot of money floating around the economy, and this could trigger hyperinflation. So prices rising by more than 50% per month in several countries. And this is very worrying, and this is very concerning for all of us who live in the US and who have had the advantage of relatively cheap prices in the US and the land of plenty in the US, where Amazon can deliver anything to anyone's doorstep almost in the click of through the click of our fingers, or Walmart has all kinds of products, or Costco, or whatever, and that is all facilitated to some degree because of the exorbitant privilege of the US dollar. And the US dollar will diminish in global status because Gulf energy monarchies have historically denominated their energy products in US dollars, forcing energy consumers to purchase dollars in exchange for oil and gas. And this arrangement is known as the petrodollar. And Gulf royals are largely from dynasties installed by the British Empire. In fact, the borders were also drawn by the British and to some degree by the French. Yeah. So that is, a major thing. And then, of course, we've already alluded to political instability. We've alluded to East and Southeast Asia. And the most important thing is other countries will lose confidence in US security guarantees, because if the US cannot open the Strait of Hormuz, can it guarantee security for Taiwan? Can it protect Taiwan, the Taiwan Strait? That is an operative question. And so if the US does not open the Strait of Hormuz, this could very well be 2026 could be the Suez. The Persian Gulf may no longer be an American lake. Iran may extract geopolitical rent because of control of that checkpoint or that choke point. That choke point may become a checkpoint. So a lot is at stake. But there's one good thing that'll emanate from it in the long term, which will please Glenn. Already prices of renewable companies are high, and that is that demand for renewable energy products will accelerate. One of my African friends said, we don't know if we'll get Gulf oil, but we'll always get the sun. So there's a big push towards investment in renewables, especially solar, particularly in poor countries. This is very good for China because China is the leader there. But this trend will be exponentially hastened because in so many countries, people do not have LPG cylinders to cook. Restaurants are not functioning. So this is one of those shocks which, like 1973 and 1979, is fundamentally going to change the global economy. Glenn, over to you. Closing words before we move on.
It's good to have the sun shining through the clouds, as it were, and I think it's important that we stress the structural, historic implications of the current war. I think this is a significant point that won't really benefit everyone noticeably for a number of years, but cumulatively. And I just conclude this so that we have some time to talk about the other topic. For 25 years at least, the United States intelligence community does scenarios every year. It's done it for many, many decades, but for at least 25 years, it's taken usually the 3-scenario approach, the least dramatic change, middling scenario, and the worst case scenario, and tried to weigh them as to what would happen in the international system and the balance of power among various states. And I'm afraid that we are starting to it seems that we are living the evolution at present, not irrevocably, but the current development of the worst case scenario, which is, we've all talked about already for a decade, 15 years, the end of the Pax Americana, a fractured international system, the decline of the restraints of international law, both regarding states and economic agreements and behavior, and a decline into, frankly, approaching Hobbesian state as in state of being, not a specific government, with increasing striation between the haves, the powerful, and the have-nots, the weak, what do we say now, the global south. And you can almost quote directly Thomas Hobbes from 400 years ago, almost 400 years ago. He said, in such a condition, there's no place for industry to thrive or culture of the earth, no society. Worst of all, there would be continual fear, danger, and violent death, where the life of man or of a state will be solitary, poor, nasty, brutish, and all too often short, because power will play out, and those who have it may thrive. It's a bleak prospect. So tell us why things are happier with all of our money.
All right, we move on to the second topic we've chosen: big trouble in U.S. private equity market. Big trouble in U.S. private credit market. Now, the U.S. private credit market is facing the greatest stress since the 2007-2008 financial crisis. It has had years of rapid growth. Just a few headlines for everyone before we dive in and explain what's going on. It's Kunal Shah, who is a Gujarati by origin, very clever chap. He's the co-chief executive of Goldman Sachs. And he's the global co-head of fixed income currencies and commodities. Now, he said, and this has come out in numerous publications, it was first reported by the Financial Times, a venerable publication from London, now owned by the Japanese, that some of Goldman's clients were just glad there's something to talk about that isn't software exposures and private credit. And of course, they were glad about the Iran war. And this is really, if this does not send warning bells ringing loudly in people's ears, I don't know what should. Let's look at some facts. Recent headlines. Blackstone Private Credit, which is a marquee name, reported first monthly loss since 2022. Ares Management has limited withdrawals from one of its marquee private credit funds pitched to wealthy individuals. Redemptions surged to 11.6% in the first quarter amid a broad flight from the asset class. Apollo Global Management, another huge name, has limited redemptions from one of its flagship private credit vehicles, becoming the latest investment manager seeking to staunch outflows as wealthy investors retreat from the industry. Why are investors ditching private credit funds? Well, because there are rising worries over bad loans. Publicly traded vehicles are trading at steep discounts, in a gloomy sign for broader industry. Last month, Blue Owl permanently, another fund and a well-known one, permanently restricted investors from withdrawing their cash from its inaugural private retail debt fund. Investors will no longer be able to redeem their investments in quarterly intervals voluntarily. And I must apologize for tooting our horn, but in September 2025, when there were bankruptcies, twin bankruptcies in Tricolor Holdings and First Brands Group, which shook private credit market, and there were fraud allegations that shook investor confidence, we pointed out in our FOI Geopolitical Risk Monitor, and this is what Sanjay Acharya and Manu Sharma worked very hard on, was that this was a massive risk. And so before we carry on, let me quickly explain what are private credit markets, because a lot of people don't know about them. Well, private credit markets, they basically make loans to companies, or rather they are non-bank lenders who make loans to companies. So if you go to a bank such as JP Morgan or Goldman Sachs, you either get a loan and there are a lot of conditions, maybe you have to attach a security, or you issue bonds on the public market. Private credit involves just private investment firms lending money directly to businesses. Now, of course, they charge higher interest rates. It's a risk reward thing going on. So who are the key players? Well, the lenders, the borrowers, and the investors. So who are the lenders? Typically private equity firms, hedge funds, or specialized business development companies. Who are the borrowers? Mostly mid-sized companies that might be too small for the public bond market or too risky for traditional banks due to strict post-2008 banking regulations. There was a big Dodd-Frank Act after the 2007-2008 financial crisis, and that has, some would say, quite onerous regulations. So people just go directly to the lenders. Who are the investors? They are large institutional players like pension funds. So it could be firefighters whose pension funds are going through an indirect route to these companies, insurance companies, sovereign wealth funds, often from the Gulf, who provide capital to private credit firms. And why do they do so? Because for a long period, we had loose monetary policy, low interest rates, and all these funds are chasing returns. And because they were chasing returns, there was too much capital chasing too few returns. They ended up making riskier and riskier bets. The covenants which borrowers, restraining borrowers or demanding disclosure from borrowers or other conditions of borrowers declined. Anyway, so these are the key players. And I'm telling you, number two, or the second part, why do companies use it? Because, of course, for the investors, they are chasing returns. For the borrowers, it helps them get around regulations. For the lenders, again, they think they are completely fixated on returns, both to themselves and to their limited partners. General partners are those who manage the fund. Limited partners are those who invest in the fund. And basically, there are advantages to private credit. Speed, certainty, you can close a deal more quickly than if you negotiate with a traditional bank loan. There's obviously flexibility. There's confidentiality, which is a big deal. So you don't have to disclose much to the general public. That's why companies like it. Why investors like it, I've already told you. Higher returns, there are floating rates. So if central banks raise rates, then you can raise rates. And because these loans are illiquid, you get higher returns. But as with everything, there are risks. When the economy turns, you're locked in. Mid-sized companies are also more vulnerable to economic downturns, so you have credit risk. There's also lack of transparency. So confidentiality may be good for the company. It's not so good for investors. It is not so good if your pension has been invested here and you don't know anything about it. And now the private credit market is a $2 trillion powerhouse. It is facing its first significant cycle of stress. Higher interest rates, economic shifts, and of course, AI is upending business models of many of these software companies, medium-sized software companies. Our sources in finance think that private credit markets suffer from significant liquidity and valuation. Of course, some are more bullish than others. Some think it's just $2 trillion. In the larger scheme of things, it is not so much. They will, the economy will ride out the downturn. Some others, however, think that just as the subprime crisis of 2007, 2008 was dangerous, the downturn valuations of private credit funds could be much higher, on paper than in reality. So they could be valued on paper much higher, and therefore people are trying to get their money out. And none other than Jamie Dimon of JP Morgan has talked about if you see a cockroach, the cockroach theory. It means that if you see one cockroach, there's a likelihood there are many others. And so one piece of bad news or a few pieces of bad news imply more hidden problems. Some argue that
my father had a much better way to describe that than Jamie Dimon. My father said that if the father finds his daughter with the stable boy in the hay in the barn, you can't believe that that's the only time that they've been together.
that is certainly more memorable. Well, I mean, going back to private credit, many think that, and we think that, and we've said so from September, that private credit represents systematic or systemic weakness in the American financial system. Banks have withdrawn from riskier markets. New institutions have replaced them in this era of cheap liquidity. Basically, these institutions have lent in opaque markets, so no one really knows what's going on. This has led to complex arrangements out of sight of regulators or even the institutions involved. And so what we see, this increase in payment in kind usage, that is a danger sign. And it is not just us. Mohammed Al-Arian, who is the former CEO of Pimco, in a very short chat, he has called, earlier this year, he said, is this a canary in the coal mine moment, similar to August 2007, quote unquote. And so some of the most reputed investors are sounding the alarm. And they think, of course, some people think financial markets will shrug this all off. But some others think that this may not be the case. Importantly, and because we are running out of time, there are two nuggets of information that are pertinent here. Our sources in law firms are worried because they think that years of low interest rates, ultra low yields, and very few bankruptcies lowered the risk premium for a lot of lending. Furthermore, covenants that allow lenders to intervene when financials of borrowers have weakened over the years. This means that lenders have fewer tools to fix a problem before default. And our sources in the US Treasury and the Federal Reserve, especially the Federal Reserve, admit and worry that systemic risk has increased. So this could lead to a credit crunch, and this credit crunch could lead to bankruptcies and job losses. And this is all happening at a time of a supply shock thanks to the Iran war. This is all happening at a time when US debt has crossed $39 trillion. And this has all happened when 2-year treasuries have been hard to sell on the open market. Over to you, Glenn, now that I have played Cassandra.
Yet again. Just to try to summarize, I'd say that Atul and I have been for quite some time, certainly I have, but I think both of us, quite some time, structural bears, not just with regard to the market, which is sort of waves on the surface in many ways of deeper economic truths, but of the economies as a whole. The Gregory Mankiw, President Bush, the son's chairman of the Council of Economic Advisors, has for years been crying wolf about the growing, almost unsolvable, certainly unsolvable for political reasons, structural debt problem of America's federal deficit and debt, which affects interest rates, which will affect the availability of cash, which will affect the GNP and employment rate. Everything Atul has talked about are both evidences of that and contributing data points, making the same broad point. Paul Krugman, who is equally well regarded as Gregory Mankiw on the center left, is Mankiw on the center right, has been saying making similar points and alarms for years. Warren Buffett, who's a man who only pays attention to fundamentals, has taken his money out of the stock market years ago. The stock market, at a more superficial level but relevant, has been growing unhindered for 15 years or 18 years now. And there's only one direction things can go when you're at the summit. The policies of the White House in the last 2 years, and for now 6 of the last 10, have been like a strong current washing the sands under the foundations of the American economy away. Almost every structural basis of a strong economy are being eroded by the decisions taken in the White House, with the exception of the one thing on which traditional Republicans obsess, which is deregulation, which does lead to greater, faster growth. That is true. It has other consequences too. So all of this adds up, as Atul detailed for us all, to, we would argue, pretty vividly flashing warning signs about a structural downturn of a lasting nature for the global economy. And that's not what the standard experts are predicting, because they do say, the data is contradictory.
Yes, and they have an incentive to say so, especially if they are in the business of selling funds and asking you to invest in their funds. But we take the view that you cannot ignore structural weaknesses and foundational flaws forever. At some point, the structure cracks.
So,
all right.
Put your money in your mattress.
or buy gold or platinum or silver or commodities like gas. Anyway, thank you very much. If you're watching this on YouTube, make sure you subscribe to our YouTube channel. Make sure you press the bell icon to get updates. Make sure you sign up for our newsletter on our website. We make sure that we give you honest, rigorous analysis. We may be wrong, but we try our best. And we will see you now in April. Until then, bye for now.
See you later.
Join the conversation at Fair Observer and subscribe to our YouTube channel.